So also from my side, very welcome to this part of the Economic and Finance Statistics lecture. We will continue now with the next part of the balance of payments and the national investment position subject, and we will cover the three remaining functional categories of other investment, financial derivatives, and reserve assets. If I may very briefly introduce myself, my name is Tobias Kuhle, and I did my PhD at the University of Frankfurt and joined the Bundesbank in 2019, and now work in the external statistics department. Since then, my topic is the functional category of financial derivatives. You're likely all aware by now of the institutions included in this program, so I will not go into any further detail here. So given the topic that we have for this part of the lecture, the structure is very straightforward. We're going to look at three functional categories in the balance of payments and the IIP, and these three functional categories are other investment, financial derivatives, and reserve assets, and we're going to look at them in the following order. As mentioned, we will start with other investment, and from the general overview, we will now jump to this specific overview about the first topic, so other investment. The first part will be a rough general introduction of this functional category. This will be followed by a more precise look at the financial instruments included in other investment. Then we will look at breakdowns and also at the links with other functional categories and accounts in the balance of payments. We will then look at the valuation and compilation of this functional category. And finally, we will have a short look on the income associated with investment in other investment functional category. So this is the first part. We now start with this general overview about the other investment category. And as we see here, you probably have seen this by now as well. We have this overview of the balance of payments and international investment position system of accounts. We have an initial opening balance sheet, which is the initial international investment position at time t, say the end of the year 2019. And there we have different sub-positions, the direct investment, portfolio investment that you have already covered by now. And then we have the other remaining three that we're going to cover now: financial derivatives, other investment, and reserve assets. And a year later, at the end of, in this case, it would be then 2020, we will have a closing balance sheet with exactly the same systematic of positions, but obviously we will have, in all likelihood, other values. And in between, so during the year 2020, we will have, first of all, transactions in the balance of payments, meaning we will have transactions in all these sub-accounts. We will also have transactions in goods and services and primary and secondary income. And we will have also other effects like changes in the market price, changes in the exchange rate, but also possibly other volume changes. And where does other investment come into play? As we see, obviously we have an opening position, we have a closing position, we have transactions in other investment, we also have exchange rates changes that affect other investment, we have price changes, normal market price changes, we might have other volume changes, and we have primary income on other investment positions. So now that we've covered this general system of accounts, the question is, what is other investment? And the answer is something that you can already see, and this is taken straight from the BPM. You can see here down below the source if you want to look it up. Other investment is a residual category that includes positions and transactions other than those included in direct investment, portfolio investment, financial derivatives, and employee stock options, and reserve assets. So if you read it precisely, these are exactly all the other functional categories of the financial accounts in the balance of payments. And therefore, everything that you cannot sort into any other of these functional categories of the financial account is included in the other investment. So let's have a look at the numbers. And in this case, I picked the ECB statistics bulletin. So we're going to look at the Eurozone IIP and the Eurozone financial account. And In the upper part of the presentation of this table, you find the international investment positions, so the positions in the different functional category and overall. And down below, you find the transactions in the different functional category and overall in recent years. So starting from 2017 for the IIP and 2018 for the transactions. I highlight the other investment category. You can find it here, assets and liabilities. And let's start with a short look at the assets, at the positions. And we see actually the Eurozone has a tendency to have more liabilities, external liabilities, compared to external assets in other investment. And if we look overall, while the numbers are not as high as the assets and liabilities we see in direct investment or portfolio investment, overall they make up a sizable share of the total IIP position of the Eurozone. And then having a look at transactions, if you see the values or the absolute numbers in transactions in other investment actually exceed the transaction values that we see in recent times in the other functional categories. So transaction-wise, the other investment category matters even more for the financial account balance of the Eurozone than the other categories, and compared to the size and share for the positions in the IIP. And this slide is added more as a reference for you, because this slide you see on the left-hand side the articles in the BPM6 that refer to relevant topics for the functional category of other investment. And if you want to look stuff up, then this is the point in the BPM6 where you can find the information for this functional category. So after this general introduction into this functional category, we will now have a look at the financial instruments that make up other investment. And here you see this list of financial instruments that form this other investment functional category. And as you may note, as I said initially, it is a residual category, but it doesn't mean that basically it's just everything else, but there is a differentiation with some very common financial instrument, and as we have seen with the numbers, that also play quite a substantial role in the international transactions and positions. So what we're going to look at are ranges from other equity, basically what equity that does not belong to FDI portfolio investment, currency and deposits, loans, bank business, but also insurance companies. We have this trade credit and advances, which might accompany the international sales of goods and services. We have basically other accounts receivable, payable. And finally, we also have special drawing rights. We're going to talk about it later, and we're going to talk about it again in the context of international reserves. So starting with the other equity financial instruments, you have seen equity before in the financial account. You have seen it obviously in FDI, but you have also seen it with portfolio investment. And now as the overall category, as I said, is residual, same is true for this sub financial instrument. If you have equity that is not in FDI because it's below the threshold of 10%, and it's not in portfolio investment because it's not stocks, not a security, then it basically is part of the other equity financial instrument in the functional category of other investment. Also, ownership of international organizations, if not in the form of securities, and ownership of currency union central banks, something which is very relevant for the European currency union, obviously. So the next financial instrument covered in the other investment functional category is currency. What is currency? Well, the BPM6 describes currency as notes and coins that are fixed nominal value and are issued by the authorized central banks or by an authorized institution of the government. And for the European countries or for the Eurozone countries, these are obviously the Euro banknotes and the Euro coins that are in active circulation. And for other countries, it's obviously foreign currency in circulation. And how this works in the other investment category is basically if a central bank in a certain country, let's say the American US Fed issues a US dollar, and this US dollar is then taken abroad by someone and given to a non-resident of the United States. This non-resident of the United States has an asset, and the US Fed has a liability, in this case, against the non-resident. And the same works basically for all the Euro countries. If US dollar is brought into a European country or Eurozone country, the respective resident has an asset towards the Fed, and the Fed has a liability towards the person in a Euro country. The issue here is for the Eurozone, that obviously we are in a currency union, and therefore we need a special adjustment, because if a German walks across the border and gives a euro note to a French person, it's still the same currency and you cannot really differentiate it. And the adjustment that is performed here is, as you can see, our euro adjustment in currency and deposits for the euro system is basically that each central bank that makes part of the European system of central banks has a certain share of notes and coins that it is allowed to issue, based on the share in the ECB of the respective country, and any issuance of banknotes and coins above that value is basically a liability towards the other countries of the Eurozone. And anything below that obviously would then be the asset position. And also furthermore, if a euro is issued in Germany, a euro note, and then taken abroad to, for example, France and given to a French resident, this is also basically an export of this Eurozone note, euro note, and would then be a foreign liability from the point of view of Germany and a foreign asset from the point of view of France. Since you cannot keep track of every single euro note and every single euro coin, these values are estimated based on the net shipments of high denomination banknotes and also based on the fixed proportion of coins to banknotes. So the next financial instruments in the functional category of other investment are loans and deposits. I put then on the same slide, since there is some part that we are going to see that makes these two comparable in a sense. So what is a loan? Imagine you want to buy some property, and the classical example, obviously, this is a mortgage. You go to a bank and the bank gives you funding to buy this property. What is the characteristic here? From the side of the bank, it's a financial asset. From your side, it would then be a liability. It's a direct funding relationship between the creditor and the debtor, so between the bank and you. And before you do this, you're going to negotiate the exact terms of this asset, this liability, so it's negotiable. Besides the example of mortgages, there are other examples like overdraft limit, installment loans, loans for trade credits. There's leasing. There are claims on basically, for example, the IMF, international, and there are repos. The other functional categories, financial instrument that is said comparable, is a deposit. Again, the example is now you have some money lying around and you go to a bank and pay it into your account, and now you have an asset against your bank or a claim on your bank. And a deposit is basically a claim either on a deposit-taking corporation, which would be your bank, or a claim on a central bank. And then there are some other institutional units, some special cases as well that might be a deposit. And obviously, the classical example is transferable deposits and all other deposits there. So why are these two related? The point is basically, in this case, not only the characteristic of the asset or of the liability that we're talking about, but the main point is basically who's sitting on which side of the transfer. And so what is a loan? If an MFI is giving money, is having an asset against any other sector, we're talking about loan. If an MFI, like a central bank or deposit-taking corporation, having an asset against another MFI, it is a deposit. And the same if any other sector has an asset against an MFI, it's also a deposit. So the crucial point about this is actually who's sitting at which side of the table, and depending on this, an asset can be a loan or liability, or it can be a deposit. Of course, for a currency union as the euro area, we have a bit of a special case with respect to deposits, and that is the Target 2 system of how the deposits are actually calculated and accounted between central banks and banks in different countries. You can see this in this example shown here below, and assume like there's a country A and with a customer who exports a good to a customer in country B. So say there's a firm or a company in France and they export a good to a company in Germany, and obviously get some money for this. So the company in Germany is basically debited this account by the bank account, and this account is then debited, transferred to the Bundesbank, and the Bundesbank records then a liability towards the Banque de France, which is the Central Bank of France, and the Central Bank of France credits the commercial bank of the exporter of the good with the respective amount, and the commercial bank in France then credits the account of the customer with the respective amount. And at the very end of the day, basically all these claims and liabilities that the central banks have due to these transactions like these with each other are novated. So basically all taken together, summed up, and at the very end there remains for every central bank just one claim or just one liability, and they're all basically then transferred to the ECB. So if Central Bank A, if the Banque de France ends at the end of the day with a claim, then it has a claim position towards the ECB, and the other central bank in this scenario has a liability position towards the ECB, and this is repeated every day for all the central banks that make up the euro area. So the next two financial instruments in the functional category of other investments you can see on this slide. The first one is liabilities of insurers, pension funds, or issuers of standardized guarantees. These can be technical reserve of non-life insurances, the annuity entitlements, life insurances, provisions for cause of standardized guarantees, and similar assets and liabilities. So basically the liabilities are of these providers of insurance or guarantees, and the assets are the corresponding positions of the beneficiaries under the contracts. And the next financial instrument we have here as a particular one is the liabilities of special drawing rights. So special drawing rights is a basket of currencies of international use as reserve assets and allocated to the members of the IMF. And special drawing rights can be held by monetary authorities or of IMF members or international financial institutions. And basically, if they hold these, they are an assets. You can be exchanged for these currencies, but the members of the IMF have basically the respective liabilities in their other investment. So we're going to meet these special drawing rights again as an asset in the reserve asset functional categories, but in the other investment, they are liabilities. So now we have the last financial instrument of the functional category of other investment, and that is the other accounts receivable and payable. There are two subcategories. The first one is trade credit and advances, and the other is called other. The first category, trade credit and advances, can be divided into into two categories, subcategories, advances and trade credits. What is an advance? Well, if you're a customer and you're purchasing a good or a service from a supplier and you pay in advance for this advance payment is basically an asset that you have, and that is recorded as an advance. If, on the other hand, the supplier delivers the goods or the services before the customer actually pays. This is then be an asset for the supplier and a trade credit. And obviously we have a respective liability depending on if it's an advance or a trade credit on the other side. Then we have the second subcategory called Other, and here we have a number of things that are liabilities or assets and that have yet accrued but not yet been paid. So basically, if you are liable for taxes but you haven't paid them yet, that would be included here. And similarly for purchase and sale of securities, for wages or dividends, for security lending fees, for gold loan fees, for social contributions. What it does not include is interest that is accrued, because that actually belongs to the respective financial asset or liabilities. So now that we have completed this tour of financial instruments that make up the functional category of other investment, next we are going to have a look at the breakdowns in this functional category and also at the links with other accounts. So now let's have a look at the breakdown, and in this case we look at the breakdown of the euro area, specifically at the asset position, but in this case you can trust me, the breakdown of the liability position is exactly the same. And up here in the upper part you see the international investment position, so the outstanding amounts, the positions, and in the lower part you see the transaction of recent years and recent months and quarters. And there are two breakdowns visible here. The one breakdown, the first one is by instrument. You see we have currency and deposits and also other assets. And the other one is by resident sector, where we have distributed into few institutional sectors. Note that this is a condensed breakdown, and if you would actually compare it, for example, to the instrument breakdown provided by the Bundesbank, that one would be more in detail and less condensed with respect to the other asset positions. And the links with other accounts, there are a number. Again, as I mentioned before, other investment is a residual category. So by that, the link is already kind of there. What we already talked about was SDRs, the special drawing rights of the IMF, where the liabilities are in the other investment functional categories, and the assets, so holding SDRs, are reserve assets. Similarly, there is what we're going to see later on, if you hold foreign currencies as a central bank as international reserves, those are not part of other investment, those are in reserve assets. In the same way, the same holds true for loans, for other deposits, for other transferable deposits, that can be, if they are held as reserve assets, are in the reserve assets functional category, or if they're held by direct investment companies, are in the category of direct investment. And also, obviously, this holds true for the other financial instruments that we have looked at, other equity, insurance, pension, and standardized guarantee schemes, and the accounts receivable and payable. Now that we have looked at the breakdown and the links of other accounts, next part that we look at is valuation and the compilation of the other investment functional category. Valuation can be broadly broken down into these three separate categories. Other equity are the same as the methods that we see for unlisted equity in the direct investment and in portfolio investment equity. Then for loans, deposits, other accounts receivable, payable, transactions, as always in the BPM, have to report it at market prices, but positions will be reported at nominal value. That is the convention, and pension entitlements are either reported directly or on actuarial basis. Then also going to the compilation, what we need for this full system of accounts, this opening balance sheet and the closing balance sheets and the change over time, is obviously not only the positions at the end and the beginning and the transaction, but also we need basically differentiation into the other changes. So what are the role of exchange rate changes, the role of price changes, and other volume changes. So we also need to include effects like write-down or even write-offs of loans and similar effects in the other volume changes. And with this, we come to our last part of other investment, which is the income on other investment. Similar as in other functional categories, if you hold an asset, you might receive income on it, or this is part of the goal. And similar, if you have a liability, you might need to pay some kind of income on the asset holder on this financial instrument. And here we have, again, the list of asset and liability classes included in other investment. And on the right-hand side, you can see what kind of investment income, what kind of income is accrued on these financial instruments. So on other equity, we have the classical equity income, dividends, for example, or if it's not listed, just the payout. On the other financial instruments, there is the typical interest. Obviously, if you have a loan, you have to pay interest to the bank. Or if there is a deposit paying interest, which might not be the case currently, there will be interest if there's income. Then we have trade credit advances and other accounts receivable payable, which might include interest as well as special drawing right allocations. And for the financial instrument of insurance, pension schemes, and standard guarantee schemes, there is we see investment income.